Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today I'm coming at you with a midweek update in the world of cannabis. So before we jump in, if you enjoy this video or you learned something, please just leave a like on it, as it really helps out my channel. And then, of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. But then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can watch episodes over time to learn about the evolution of the industry, identify top companies that you keep seeing pop up, and take advantage whenever you're ready. But before we start, just want to cover a few things. Air Wellness, the parent co, Grow Generation actually came out last week, and then TerraSun. Some more MSOs come out with earnings this week, so I'm going to cover that on a Friday episode. So just want to mention that first. Secondly, although Biden's press secretary Jen Psaki did say that he might explore his executive power for clemency for nonviolent drug offenders, we've not heard any news on that, mainly because Jen Psaki said that and then went on vacation, and then Biden went on vacation. And then this whole Afghanistan debacle happened, which is understandably getting in the way of that. So no doubt it seems as if Biden were to follow up on his cannabis promises, or his campaign promises around cannabis after this could give him some brownie points. But, you know, hey, stuff happens, and that is clearly a big deal, and I'm sure he has to deal with a lot going through that right now. But most importantly, all of that just means that, you know, Biden's on vacation. Congress is actually off until September, I believe. But it's worth noting that September 1st, Congress is coming back, and they have to release the official comprehensive bill, the official CAOA, and not just the draft bill. So that will definitely, I imagine, bring cannabis back into the spotlight a little bit. But just keep that in mind. We're still August 18th, so that's probably this week, and then another week that we could potentially trade sideways. So I know it's difficult to watch. I know it's not fair. I know it sucks. And I know it doesn't make sense. But if you can, it's the best time to accumulate. And it's just a matter of staying patient, keeping your head cool, and not, you know, selling for a loss or doing anything that you wouldn't want to do in the meantime. But that being said, we're going to start, and I think this is a big vote of confidence for anyone that's worried about Trulieve or doubting the closed case that has nothing to do with Kim and nothing to do with Trulieve. It's already decided that she just bought another roughly 100,000 worth of shares in Trulieve. And obviously this means she believes these shares are going to be worth a lot more in the future than they are now, and that's why she's making this play. And, you know, this is a big vote of confidence in Trulieve at least. So if any of you are worried, you gotta love it when Kim steps up and does this, because she is a leader in that sense. On to a couple articles from Bloomberg and then Barron's, basically talking about the Fab Four emerging in the expanding cannabis market. So although, you know, I try to shed light and give my perspective, I'm actually just going to read through some of these articles, because what's nice is that these articles are saying what I've been saying for the last few weeks. So just want to have you be able to hear it from actually Bloomberg and Barron's. The Fab Four emerge in expanding cannabis market. And obviously, I mean, I'm getting this from Todd Harrison and a lot of sources like that, and you're just going to notice him in here. But with more than a dozen cannabis companies reporting earnings last week, what stood out for investors was the most basic concept in business: growth. You can't ignore that anymore. Almost across the board, big companies reported sales gains approaching 100% or more, despite tough comparisons from a year ago, when consumers stockpiled cannabis because of the pandemic. There are still questions about profitability for some, and middling stock performances this year reflect that, but investors are starting to recognize signs that the industry is maturing. Todd Harrison, founding partner of CB1 Capital Management, a New York-based cannabis-focused fund, even thinks there's a hierarchy shaking out akin to the tech industry. He calls the Curaleaf Holdings, Green Thumb, Trulieve Cannabis Corp, and Cresco Labs the Fab Four of the cannabis sector, taking over from the Canadian growers that previously dominated. Harrison compared their ascendancy to the rise of Facebook, Amazon, Netflix, Google, the FANG stocks over the old dot-com era companies. Primary metrics often determine the success of an investment. Harrison, whose fund already has a position in these four cannabis names, said in a newsletter he also suggested Verano Holdings Corp, which went public this year, may also be along that list. Now, we don't need to cover this because we already went through it, but yes, the numbers and the growth are phenomenal that we've seen from these MSOs. Now, despite the growth, the velocity of these companies sometimes goes unrecognized outside the cannabis industry. Tech companies often steal the spotlight as high-growth names, but many in that industry, especially the biggest firms, would envy the kind of gains being reported in the cannabis market. Today really is day one for the great American cannabis growth story, Green Thumb Executive Officer Ben Kovler said on a call with analysts, and we're going to watch this call in a moment. But another way to look at that as a long-term player for this decade, let's say the decade is a 9-inning game, and we're going to see this industry evolve over time. We're just rounding out the first inning. Like, we're not even in the second inning yet. In a phone interview, Kovler said that the growth reflects an unmet appetite for cannabis. Broadly, it's as simple as there's a lot of demand for cannabis from American consumers. And this is worth adding. 13%, the amount that Advisor shows pure U.S. cannabis ETF has fallen over the last 3 months. Even as some companies have reported strong revenue growth, 13% is not that bad. And although it seems like we haven't gone anywhere, if you were to actually look at 2018, or even just what Canopy and some Canadian LPs have gone through in terms of, you know, when the price jumps up and spikes and then comes all the way back down, could be a spike of 30% in a week, but then a drop of 40 or 50%. So just as much as these US MSOs have not moved, they are not as volatile as the Canadian LPs as well. So I think that's something worth noting, that they're holding fairly strong where they're at and they haven't dipped a whole lot lower. But we're going to go on to this article from Barron's highlighting the same thing. Cresco, Trulieve wraps up this week's US cannabis earnings on a high note because yes, these numbers as a group, it could be said these earnings have been rather spectacular. I don't know why I said that so weirdly, but as a group, it could be said these earnings have been rather spectacular. Advisor Shares COO Dan Aarons said in an emailed statement. On the other hand, Canadian cannabis earnings were mediocre to weak, although they talk a big game about future expectations. I'd prefer actual present-day grade execution like we see with the US operators, and I agree with that 100%. US growers, referred to in the industry as multi-state operators or MSOs, list shares on the Canadian Securities Exchange. Such stocks trade over the counter in the US. Their competitors that are based in Canada have the luxury of listing on the New York Stock Exchange and NASDAQ, where they can more easily tap into investment from institutions in the US packaged goods firms. Now keep in mind though, this is because in Canada, cannabis is federally legal, therefore they can uplist onto major US exchanges. But because cannabis is still federally illegal in the US, these MSOs cannot. But that's what the Safe Banking Act will change. It will allow these MSOs to uplist and therefore get access to US capital and the volume that comes with that. We saw strength across the sector. Bechtel said this quarter is the perfect example of why the real opportunity is down here in the US, the real value play with the US operators. I'm proud of the sector and we are so proud of the team for executing the way that we did, and we're excited for the quarters to come. And for that real value that we're getting, that's why we have to deal with this bullcrap of the prices not moving. But, obviously we think that there's more to this story, and there's obviously a lot of complex changes going on in the background. I think the word transformational may get thrown around a little bit in our industry, but truly this is a transformational acquisition, Rivers said, based on the Harvest acquisition. Harvest will increase our addressable market by 53%, so it really is a transaction that we believe will set us up for Cannabis 2.0 in this country as we think about how our hub model will evolve. And keep in mind, in the big picture, long term, getting this for $2.1 billion is likely going to be viewed as a steal and a great deal in time. From Kim Rivers, Aarons, who is the portfolio manager for the Advisor Shares Pure U.S. Cannabis ETF, noted that despite U.S. cannabis firms beating expectations, most of their major stock prices dipped. He believes, so this comes from Dan Aarons, market forces such as restrictions on trading and custody have been weighing on the stock prices. And I just want to share this to align it with what I've been saying. I've been trying to paint as clear a picture, right, as possible. And so at least hearing this come from Dan, it is in line with what we've been hearing from our other sources. So it's not crazy to believe that, it's weird that, the share prices have not moved one bit despite these phenomenal earnings. So, that's no surprise that, again, if you cannot buy the shares, we're just going to see the shares go down in value. And honestly, who's selling at this point? Like, why on earth would you be selling any of your shares other than you're just scared and you don't know what you're invested in? Seriously. Government inaction with U.S. cannabis reform also hampers the trading of U.S. cannabis stocks, he said. A great deal of cannabis reform was promised by elected officials, such as banking reform, removal of tax issues, and potentially major U.S. stock exchange listing. Politicians are politicians and slow to act. And so, this is what we're waiting for. And obviously, this investment opportunity is not for everyone. It's not for people that just want to earn 7% a year. But if you have the patience and the cojones to hold out, I think you'll be rewarded in time if we do see this reversed, potentially in the fall heading into the new year, because the Dems don't have much time left. And the good news from that is that New Jersey's cannabis industry rules will come this week, bringing the state a step closer to legal sales. So the Cannabis Regulatory Commission will meet Thursday at noon and plans to adopt rules then, according to the latest agenda. The legal cannabis law signed by Governor Phil Murphy in February set a deadline for August 21st for the commission to establish its rules. While the law lays out the types of cannabis business licenses that will be available in New Jersey, the commission still has a lot of power. It will oversee licensing of new businesses and the allocation of tax revenue to communities harmed by cannabis prohibition. Once the commission adopts its rules, the real countdown to legal cannabis sales begins. The panel will ultimately decide when sales can start, but must pick a date that falls within 180 days of August 19th, which is positive. New Jersey currently only has businesses licensed to grow, process, and sell medical cannabis to authorized patients, but the state can allow these dispensaries to sell to the public too, once they have enough product to meet both the patient demand and that of the 21 and older market. And so during Thursday's meeting, commissioners will summarize the rules, said Tony Ann Blake, a spokeswoman for the panel. They will then be posted on the commission's website. And we've heard Ben Kovler mention that it's possible this New Jersey can be up and running their adult use market in November. Now, obviously, that's ambitious, but the whole idea is that, hey, if New Jersey wants to get this online, don't they need functional banking to give the social equity applicants and entrepreneurs that were affected by the war on drugs access to capital and the ability to, hire people and allow the people that they hire to open bank accounts? So I think ultimately this is very good and should be seen as progress, because the sooner that New Jersey and other states to recently legalize can get their adult use programs online, that calls for safe and functional banking so that these states can obviously allow the social equity applicants to benefit just as much as the bigger MSOs operating in those states. And then we've got this interview with Ben Kovler that I'm just going to play for you because he's such a good speaker. He answers the questions well, and he makes a lot of sense.
Me. So. Pretty aggressively. We see a lot of growth coming for U.S. cannabis, and we're sitting inside a protected moat given the regulatory structure. So there's a huge amount of growth ahead. Just industry-wide, to put it on the map for you, currently, U.S. legal cannabis sales is a $24 billion industry. We believe that will triple in the next decade. So that's $50 billion of growth that we're going to be investing into.
Conservative, I'd say.
Hey, it's Brian Chung here. So I guess when it comes to your strategy here, we're talking obviously a lot about the distribution to these new markets like New York and New Jersey, but how do you balance the retail presence that you have? You've got about 62 retail locations right now, in addition to the distribution of your products to maybe other third-party storefronts. How are you kind of balancing that approach as you think about those new markets?
Yeah, the way the market is regulated in the United States, it's state to state. And so what you produce in one state, you cannot transport to another state. And so our strategy is to go into limited license markets and gain one of the licenses to produce our branded products, at the same time have retail locations for throughput. However, over time, as you're seeing, say, in Illinois, for example, where we have 10 of the 110 stores today, fast forward 2 years, there'll be 300 or 400 stores, and we'll still have 10. So over time, our business will shift to the branded consumer products. The whole time, this has been a branded consumer products play that we think the consumer will develop a relationship with. However, the retail strategy through Rise Cannabis really helps us get to know that consumer, serve the product, understand the brands, and stay on the cutting edge of what's happening in cannabis.
Ben, the big question mark sort of clouding the industry has long been about federal legislation. You don't have that pass through yet, and yet you've got more than 20 states that have already legalized marijuana, both from a medicinal standpoint or from a recreational standpoint. At this point, how big of an unlock would it be if you got the federal legislation? In other words, do you necessarily need that in order to keep this momentum going when you've got so many states that are opening up these markets to a brand like Green Thumb?
Yeah, we do not need new federal legalization or federal regulation to continue to operate the business profitably with cash flow, hiring thousands of people, and growing. You've seen just in 2021, despite no federal policy change, New York, New Jersey, Connecticut, and Virginia
New Mexico
all legalize. That's more than 40 million Americans that are now going to have access to the product. Green Thumb has one of the limited licenses in each one of those states, and we're going to put our capital to work to execute for shareholders to generate returns, regardless of federal policy. Now, we believe that anything that happens at the federal level is upside optionality. We're not dealing with a Jeff Sessions. We're dealing with a federal government that is thinking progressively on this product, that has indicated that this is going to be a state decision, which is usually, a United States dilemma, federal versus state. We see this going to the states. You're seeing that happen now, and you're seeing unbelievable statewide economic momentum through taxes and jobs that is somewhat unstoppable.
I agree.
Ben, as you mentioned, really it's going to differ maybe state to state, but what does the competition look like when you're marketing these types of products, right? A pre-roll used to just be a pre-roll, an edible used to just be an edible. It was wherever you could get it, but it seems like now there are all these products, at least where it's legalized, where consumers do have a choice of where to go. So how important is branding, is execution in marketing when it comes to taking new products to market?
It's incredibly important. It's a great day to be an American consumer of cannabis because you can go get this power of choice, and the consumer dollars can drive the producers and innovators like us. So it's a great time. It's going to continue to improve. We see more, opportunity and more optionality coming. You're right. The product used to be 100% smoked, and now you're seeing innovation in edibles and consumables, in vape and concentrates, and in cutting edge products like drinks and other sorts of social consumption. And so Green Thumb is well positioned with brands in each one of those spaces to take advantage of who is that consumer and how they develop a relationship with that product.
Ben Kovler, Green Thumb Industries founder and CEO, thanks for jumping on Yahoo Finance this afternoon.
Yeah, thanks for having me.
I have a lot to learn from Ben and his pauses and his slow speaking, but he's a great speaker, and just all of that makes total sense. And if you're looking at the fundamentals and the data too, paints the same picture. It's just a matter of the politicians to catch up. And on top of this, Bloomberg intelligence touches on how pharma, tobacco, and beverage interest is growing in cannabis. Ugh, that sucks. Wonder why? It's to ring true in a lot of things. Just follow the money. Because apparently pharma, tobacco, beverage interest is growing in cannabis. A key survey finds that consumers substitute cannabis for painkillers, alcohol, and cigarettes. This may be due to a widening preference for natural ingredients, which should only increase as regulated cannabis becomes more widely accessible. We expect interest from the pharmaceutical, alcohol, and tobacco industries in legal cannabis to steadily increase. Jazz Pharmaceuticals acquired GW Pharma in May for its U.S.-approved Epidiolex cannabidiol medicine. Consumer companies like Constellation Brands, Molson Coors, Altria Group, British American Tobacco, and Imperial Brands have formed joint ventures or acquire stakes in Canadian cannabis firms with plans to enter the U.S. when federally permissible. Because, according to that survey, about 56% of respondents said that they would substitute cannabis for beer, or it seems like the way they want to put this, they would substitute beer for cannabis, followed by distilled spirits for cannabis and wine for cannabis. But this all points to just the fact, if you can't beat the cannabis industry because it's not being stopped, you got to join them. And I think the cannabis CEOs, most cannabis connoisseurs do not want this industries to cross-pollinate and get involved, and the best thing we can do is just over time be mindful of our choices as consumers and who we end up supporting in time. And then I wanted to share this from Cannabis News and Due Diligence. Top 100% quarterly revenue from cannabis companies, U.S. and Canadian LPs. So this tells you the most recent quarter revenue net in millions of dollars. Just a very cool visual. So you can grab that link below in the description here, but clearly we can see the leaders: Curaleaf, $312 million from cannabis alone. Green Thumb Industries, $221 from cannabis sales alone. Trulieve, Cresco Labs, Verano. Now just to point out, Canopy, this is not from cannabis alone. This is from cannabis and their CPG, CBD brands in the US that they sell through. TLRY, for example, though, this is their cannabis alone, because they also do have that CC Pharma distribution company. They've got Sweetwater, a lot of other things, but this is from cannabis alone. So you can use this to take a look at revenues, try to estimate earnings or profits that these companies will keep after revenues, and then compare that to the market caps. But obviously, I think these are the fastest growing candidates, so you're most likely going to see the most explosive growth in these when SAFE does pass, allowing for uplisting and other next catalysts. So on to some MSO news as Cresco Labs opens Fort Lauderdale Dispensary, its 9th Florida location and first under the SunnySide brand. Now, I did mention this on Sunday when relaying through Florida, but just wanted to add that the company is converting all one-plant dispensaries into SunnySide. So you'll see anything that was one plant before become SunnySide, and their branding is just spot on. It's very nice. But they basically announced this. The Fort Lauderdale location is 2,500 square feet of retail space and 5 point-of-sale stations. The store will offer products from its one-plant brand, as well as new offerings from Cresco Labs' house of brands, including FloraCal Farms, Mindy's, Good News, Wonder Wellness, and High Supply. Products encompass premium flower and the highest quality genetics, pre-rolls, vapes, concentrates, and CPG products that Cresco can offer. But on top of this, I like to see that Cresco acquires a top-performing Maryland dispensary, Blair Wellness Center. So it's just a single dispensary, so it's not like they're buying a big operation. It seems like they're buying a successful operation, which I like to see. Announced today the execution of definitive agreement to acquire 100% of the outstanding equity interests in Blair Wellness LLC, a Baltimore, Maryland medical cannabis dispensary. The transaction is expected to close in Q4 of 2021. And I like this because Maryland has put cannabis legalization on the ballot for 2022, or at least the governor has said that the state will do that. So that's very positive because it looks like they want to get in while it's medical before it opens for adult use. And so just operational highlights. One of the top performing dispensaries in Maryland, which is great. 6,500 square foot building located minutes from downtown Baltimore and centrally located between the city's numerous universities. So very highly populated areas. Strong patient customer retention for more than 3 years operating in the market. And then Maryland market highlights, 18th most populous state in the U.S. with approximately 6 million people. Robust medical market with annualized retail sales of over $500 million, and constructive commentary from Maryland House and Senate on adult use bill in 2022. So as long as that gets on the ballot, if there's a bill, even better, but if that gets on the ballot, then at least has the voters vote, which they'll likely vote for, and help speed that process up. But the transaction details, They don't tell us how much they spent, but the transaction implies a 1.8x 2021 revenue multiple, which seems very, very good revenue, not earnings multiple, satisfied through the payment of cash and a 24-month promissory note. That transaction will be completed on a cash-free, debt-free basis with a mutually agreed upon normalized target level working capital. The cash consideration would be payable upon the closing of the transaction. And the closing transaction is based on approval and receipt from all CSE and regulatory approvals. But nonetheless, it's great to see them continuing to execute with the cash that they have on hand. Seems like they're not spending a whole lot to get this, but it's in key markets where medical will become adult use in time. While Columbia Care expands New Jersey footprint with new dispensary in Deptford, bringing scale to South Jersey. This new location marks the company's second location in the Garden State and 74th open dispensary in the U.S. And so some details here. The Deptford location will complement Columbia Care's existing dispensary with 50,000 square foot cultivation and production facility in Vineland, which completed its first harvest in July. Columbia Care is developing a third dispensary in Hamilton Township that is expected to open by the end of 2021, as well as a second cultivation and production facility in Vineland that will provide 250,000 square feet of additional canopy manufacturing and distribution space pending regulatory approval. So this will help them obviously get a head start in New Jersey, and I believe New Jersey is one of the limited licensed states, so they don't allow a whole lot of licenses. So obviously for them to have more than one dispensary is great, gives them a bigger footing in New Jersey, the state that is set to come online, or the new legal state to come online the soonest. On top of that, 4 states report record-breaking cannabis sales in July. Now, I have covered this periodically over videos as we've gotten the data, but just wanted to show because, this is a continuing trend that's been observed in numerous states as cannabis markets have come online and matured, and it's all the more impressive considering how the industry has thrived even amidst a pandemic. So very big deal. So this is in Illinois, Maine, Michigan. Sales in adult use cannabis has reached new highs in July. The same goes for Missouri's medical cannabis market. So we've covered this, but it's just great to highlight that obviously, the sales slowed into the summer in some other of the Western markets that I covered previously. Illinois saw strong growth. Maine saw record sales reach 9.4 million in July, a 45% increase from the prior month's record. I didn't even notice that when I was actually preparing, but that is a big jump, 45% increase year over year. So Maine residents are getting comfortable with cannabis. Michigan sales broke that record up to 171 combined with adult use and medical. And then Missouri, first time medical cannabis sales exceeded 20 million in July. And so that's just great to see that in some of these newer markets, the younger growing ones, the growth is accelerating. On top of that, Ohio activists submit revised cannabis legalization petition for 2022 ballot after the state rejected its earlier version. So good to see. And again, just want to highlight individuals on the ground in Ohio. Gotta love these activists in these states. Ohio activists on Friday submitted a revised petition to put cannabis legalization on the 2022 ballot after the state attorney general had deemed previous summary language misleading. So get that though. All these efforts by people from Ohio, and then it's the state attorney general that goes, oh, well, the language was misleading, so you got to do it all over again. Sucks, but hey, the activists are doing what they got to do. The development comes as some state lawmakers are also pushing a separate plan to legalize cannabis. So the combination of these two are great especially for the citizens of Ohio. The Coalition to Regulate Cannabis Like Alcohol launched its ballot effort last month, but after turning in a measure with more than a requisite initial 1,000 signatures to trigger a review, the Attorney General said he was unable to certify the proposed summary as a fair and truthful assessment. Okay, it's just his discretion. There were 7 parts of the summary that the official identified as problematic, and he concluded that it does not properly advise potential signer of a proposed measure's character and limitations. Okay, fair enough. Soon after reviewing the criticisms, activists made fixes and submitted the new language with another batch. So it's ultimately up to Attorney General David Yost's discretion. Office now has another 10 days to look over the revised summary language and make a determination as to whether advocates can begin collecting more signatures towards qualifying for the ballot. But shows that, hey, they're putting in the work and they're making progress in Ohio. So gotta love that from individuals on the ground, while individual veterans push for medical cannabis in the conservative South. Yes, love this, because veterans deserve this plant more than anyone else. Each time Chase Roth drives home to North Carolina, he notices the highway welcome signs that declare nation's most military-friendly state. That's a powerful thing to claim, said Roth, a former Marine Corps gunnery sergeant who served multiple deployments to Iraq, Afghanistan, and Pakistan. Now he's calling on the state to live up to those words. A Wilmington resident, Roth is advocating for lawmakers to pass a bill that would legalize medical cannabis and allow veterans with post-traumatic stress disorder and other debilitating conditions to use it for treatment. Highlighting, I've lost more men to suicide since we went to Afghanistan in 2001 than I have in combat, said Roth. He said he doesn't use cannabis himself, but wants others to have the option. It's just unacceptable for these guys to go overseas and win the battle and fight for everyone's freedom here and come home and lose the battle to themselves, which is such a fair point. I love that he put it that way. He is among several veterans brought together by a recently formed advocacy group called NC Families for Medical Cannabis. These veterans have testified before the legislature and visited lawmakers individually. So in a state that's home to 8 military bases, one of the largest veteran population in the country, in a Republican-controlled legislature that prides itself in supporting the troops but not supporting cannabis for the troops, they hope their voices will act as a crucial lever to push through a bill that has faced opposition in the past. So isn't that crazy to think that obviously this shouldn't be up to the veterans to do the work. It should be the government that sends these veterans to war, for their country. They should be the ones implementing the system that takes care of them when they get back. So obviously this is ridiculous, but good to see someone's got to start this push. So hope they can get the help that they need. But on top of that, California completes Cannabis Regulatory Agency merger as a new cannabis czar takes over. So it sounds bad, but what does this actually mean? So it just means they've created a new Department of Cannabis Control, which counts nearly 400 employees, led by Director Nicole Elliott, a Newsom confidant for more than a decade. Now, from the start, the new agency's goal represents a lofty to-do list for what is, in effect, a central clearinghouse charged with overseeing the world's largest legal cannabis market. It also must grapple with the world's largest illicit market. And the DCC combines the regulatory, licensing, and enforcement responsibilities of 3 different state agencies into one large, wide-ranging regulator. Now, in the past, when you take 3 offices and turn it into one big one, typically things get even slower and more ridiculous, so we'll only see what happens in time. But we're going to add that this actually is beneficial because they're providing grants to some of the small businesses in California, so we'll get there. But we heard from businesses, local governments, law enforcement, and others that it was complicated to work with 3 different state cannabis programs, and so that's why they combined into the one. But so basically going forward, what they hope to do, we are preparing to roll out the Local Assistance Grant Program, which commits $100 million in funding to assist local governments and licenses with swiftly moving from provisional licensure to annual licensure, Dempsey said as well. Now, though none of the $100 million has yet been made to any of its recipients, Dempsey said that the agency's goal is to begin dispersing funds by the end of this year, and the grants, which will be dispersed to 17 cities and counties in California, will provide aid for local governments in processing substantial workloads to transition businesses into the regulated market, incentives for local governments to better align permitting methods with the state to remove barriers to licensing, resources to support the completion of environmental impact assessment and mitigation, and additional assistance to support eligible jurisdictions implementing social equity programs. So this is a big deal. Basically, they're trying to help as many people go from illegal growing and operating to legal growing operating by providing more licenses and providing funding and to help do so. So this could really help expand, the legal numbers in California's regulatory market and take away from the black market. So it's a great push. Obviously, we're going to see what happens in time, but push to support local communities, municipalities to create more pathways to the regulated market is welcomed by legal operators who take on high capital, taxes, and compliance costs while the underground market thrives. Los Angeles-based Global Go Analytics estimates California's illicit cannabis market generates $8 billion in annual sales, nearly double that of the legal market, which MJ Biz Factbook pegged at $4.4 billion last year. Ultimately, we want to make it easier to participate in the legal regulated market and less desirable to operate in the illicit market, Dempsey says. So we hope to create more opportunities for businesses, particularly small businesses who want to enter the cannabis market. So this is a great effort. Obviously, the execution is going to be the most important part, but in order to reduce crime and collateral damages from that robust market, and this is ultimately good for investors in time who hold out and patiently stay invested as this market allows for more legal access and legal sales as opposed to illegal ones. And then lastly, big news is TLRY has made their move to acquire a majority position in amended MedMen convertible notes. So this is very interesting. This was what they ended up doing. The investment provides TLRY with potential accelerated path into U.S. cannabis market upon federal legalization. So they cannot exercise this until legalization happens. And amendment and extension of convertible notes enables MedMen to reshape balance sheet and further accelerate its growth trajectory. So I'm going to try and just keep this as simple as possible. So I'll just read through this. Transaction overview. Under the terms of the transaction, a newly formed limited partnership, the Special Purpose Vehicle, established by TLRY and other strategic investors, acquired an aggregate principal amount of approximately US $165.8 million of the notes and the warrants, all of which were originally issued by MedMen and held by GGP, representing 75% of the outstanding notes and 65% of the outstanding warrants. So basically, TLRY has purchased the right to buy these convertible debt notes for a value of $165.8 million. Now, TLRY's interest in the SPV represents rights to 68% of the notes and related warrants held by the SPV, which are convertible into and exercisable for approximately 21% of the outstanding Class B subordinate voting shares of MedMen upon closing the transaction. So that amount of money gives them the right that on U.S. legalization, they can exercise the conversion of these notes, which will then give them 21% ownership of the Class B or common voting shares of MedMen. So basically, they're spending $165.8 million to buy 21% of equity ownership in MedMen in the future. So honestly, it's a very strategic play. I don't know much, obviously the technicals, there's a lot more to it. Just to add, as consideration for TLRY's interest in the notes and warrants, and subject to TLRY receiving a stockholder approval necessary to increase the number of shares of its authorized capital stock, TLRY will also issue approximately 9 million shares of its common stock to GGP, provided, however, that if TLRY has not received the stockholder approval by December 1st, 2021, GGP may elect to receive cash rather than TLRY shares, which would almost be better. That way it doesn't dilute TLRY shareholders and it's used as cash instead. But TLRY's previously scheduled special meeting for stockholders is set for Thursday, the 19th, which is tomorrow, and MedMen did not receive any proceeds from the transfer of the notes yet. So this would only be when it's executed. So as we were watching for TLRY to make a move, this appears to be their play. So this will give them 21% ownership of a US MSO pending US legalization. But it's worth noting that the 2018 Canadian bubble that saw LPs rise to $25 billion valuations, but also saw these MSOs rise to $2, $3, or $4 billion valuations initially as well. Consider the fact that they were trading at prices higher than they are today, and that was 3 years ago when they were much smaller companies. But I want to take this point to add that back then, MedMen was also trading at about $3 or $4 billion valuation. Today, because they did not execute like some of these other MSOs, MedMen is trading at a valuation of like 240 or 250 million. So that is what gives TLRY the ability to get in there so cheaply. It just goes to show that, as much as people want to say the one thing in investing you can't say is this time is different, well, folks, the fact of the matter is that you can buy a lot of these MSOs, including the Tier 1 or Fab 4 that Todd Harrison is referring to, for lower valuations today than you could have bought them at the peak of the 2018 bubble, and today their fundamentals are like 5 or 10 times stronger than they were back in 2018. So as much as you don't want to say this time it's different, for the US MSOs in terms of fundamentals and their valuations, it really is different. So that is, again, why now is the time to accumulate. But this is not investment advice. Make sure you do your own research before you make any investments. But hey, all the information is here. It's just a matter of you putting in the work to learn and take advantage, because it's wise to view falling share prices when the fundamentals are only getting stronger, when these companies' market caps are trading less than their book value and their total addressable markets in the US keeps expanding, and there's 32 more states yet to legalize for adult use. Although it's annoying for us investors already in, who don't have the dry powder to average down. And yes, new investors can come in and just open a position now at prices that, we didn't expect to ever see again, that you could have got in for last fall. But ultimately, at the end of the day, it's not worth worrying about pennies, because in time, if you stay patient, you will be rewarded. And that is it for today's episode, folks. So I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think of the stories mentioned? Let me know in the comments if you have any questions or concerns, and please do your best to poke a hole in the thesis. I always welcome anyone trying to be the devil's advocate and explain why these will not come or why this won't happen, but ultimately, you got to come with facts. Otherwise, emotions aren't just going to cut that, because at the end of the day, it seems like we're getting closer and closer, and this fall, especially with the bill being introduced on September 1st, potential of New Jersey going online in November, and the closure of that Trulieve and Harvest deal, I do think we might see some price movement in the fall, but obviously we're going to have to wait and see. So that is it. If you enjoyed this episode, please leave a like on it, subscribe below if you don't want to miss any future videos, and I will catch you on Friday for the latest round of MSO earnings. Have a great day, everybody.